Welcome to the CFA Level 1 practice test. Domain, Fixed Income. Part 2. A new accounting standard requires companies to capitalize operating leases that were previously disclosed primarily in footnotes. What is the likely impact on bond yields? A. Decrease, due to improved transparency. B. Increase, due to higher reported leverage. C. Remain unchanged, as the information was already public. D. Not applicable. Answer is B. Increase, due to higher reported leverage. A bond priced at $980 with modified duration 6.2 faces a yield increase of 75 basis points. Estimate the new bond price. A. $934.43. B. $975.35. C. $1,025.57. D. Not applicable. Answer is A. $934.43. What fundamental agency problem arises in corporate bonds related to issuer management actions? A. Reduce the overall risk profile of the company. B. Maximize shareholder value, potentially to the detriment of bondholders. C. Ensure timely payment of all interest and principal to bondholders above all else. D. Not applicable. Answer is B. Maximize shareholder value, potentially to the detriment of bondholders. Bond covenants protect bondholders by addressing conflicts with which group? A. The bond trustee. B. Other classes of bondholders. C. The issuer's shareholders or management. D. Not applicable. Answer is C. The issuer's shareholders or management. What is a fundamental responsibility of a bond issuer as stated in the bond indenture? A. Maximization of returns for equity holders. B. Adherence to all stock exchange listing requirements. C. Fulfillment of coupon payments and principal repayment. D. Not applicable. Answer is C. Fulfillment of coupon payments and principal repayment. A bond indenture provision requiring the issuer to insure its main assets is classified as what kind of covenant? A. Negative covenant. B. Affirmative covenant. C. Collateral provision. D. Not applicable. Answer is B. Affirmative covenant. Estimate the percentage price change of a bond with modified duration 7.5 and convexity 65 given a yield increase of 75 basis points. A, minus 5.625%. B, minus 5.442%. C, minus 5.259%. D, not applicable. Answer is B, minus 5.442%. Find the price of a bond with $1,000 par, 5% semiannual coupon, 3 years to maturity, and 6% market discount rate, semiannual compounding. A, $972.91. B, $1,000. C, $1,027.75. D, not applicable. Answer is A, $972.91. What is the legal contract called that outlines bond issuer obligations and bondholder rights? A, debenture. B, indenture. C, prospectus. D, not applicable. Answer is B, indenture. Between two identical bonds where one is callable, which statement about pricing is most accurate? A, bond B will trade at a lower price due to the issuer's call option advantage. B, bond B will trade at a higher price because the call option adds value to investors. C, both bonds trade at the same price until call option exercise. D, not applicable. Answer is A, bond B will trade at a lower price due to the issuer's call option advantage. Thank you for watching. For more learning videos and tutorials, subscribe to BISP Trainings.